The advocacy organization Investors for Paris Compliance has released a report that explores what the group calls a contradiction in the insurance industry. Insurers have been raising rates or dropping coverage in regions such as BC and Alberta and Quebec, which have had brutal weather, which many scientists think is linked at least in part to global warming. But at the same time, they're underwriting and they're investing in oil and gas. Let's bring in Kiera Taylor, Senior Policy Analyst with Investors for Paris Compliance. Thank you very much indeed. So you're a Canadian group and you're focused on Canadian public companies. And what do you want to see?
Yeah, our goal is really to hold those companies accountable to their net zero commitments. So you'll see large financial institutions committing to be net zero by 2050. And we really ask, okay, what's the substance behind that? How are you going to get there? What's that going to look like? Investors should know, and the general public should also know.
Yeah, there's a lot of talk about net zero, but not always a lot of details on how they're going to get there. So just tell us what your problem with the insurance industry is here, please.
So we published a report today. It's called Playing with Fire, and it outlines the top 7 P&C insurers in Canada, and it shows how they're entrenched in this contradiction. So while climate change is an existential threat to the insurance industry, which has been widely acknowledged by the industry, they're facing higher claims, growing uninsurability. At the same time that is happening, as you mentioned, the industry and all of the companies are heavily investing in fossil fuels and also underwriting fossil fuels. So it's that contradiction that we're really calling out in this report.
I was discussing this with the producer, Ryan Miller, before the show. Are they doing anything wrong here, though? I mean, they're trying to pull out of areas where they can't make a profit. Meanwhile, they've got these investment portfolios they need to earn a return on. Is there anything really contradictory there, is what I mean?
It is, yeah. We can see that their expenses are going up immensely. So, for example, we can see that Intact, they're the second largest insurer in BC. And in BC, we can see massive wildfires, severe weather events. Floods, all of that. And so their expenses are going up a ton. And then they are fueling into those severe weather events by financing them. So that's the contradiction. We also see Desjardins, they pulled their flood coverage in Quebec, while also they have $300 million invested in fossil fuels. So it's the undercutting of their own profits, really.
It's interesting. I mean, you also look at the banks, you look at TD, you say they're actually a leading financer of hydrocarbons, of oil and gas, but I don't think we've heard that much about insurance companies' portfolios. How did you dig this information up?
Yeah, for sure. So we definitely have seen the big banks be kind of the focus of all of this advocacy. But we've seen this conversation happen around P&C insurers, but only on the one side. And that side being the higher claims, kind of this victim narrative of we're facing higher claims, this is harming us. But the other side of the coin, which is them contributing to the harm, hasn't been discussed. So we saw that as an organization happening mostly last summer when wildfires were insane out west and out east. And so we wanted to do a deep dive into these companies.
It's interesting, yeah. Now, I suppose the insurers would say, well, we got to earn a high return on our portfolio for our shareholders. We're all against global warming, but it's a bit like the big pension funds that refuse to divest. I mean, it's kind of a hard argument. If it's legal for them to invest in these oil and gas shares, shouldn't they, if they feel it's logical?
Yeah, it's definitely legal, but the regulation is coming. So the argument is you can try and self-regulate, and that's good. But if your disclosures are patchy, if they're not quite getting there, then government is going to come in with some harsh penalties, some harsh regulation, and that's going to come a lot quicker and hurt a lot more than if these companies, take the initiative and be proactive about this disclosure.
Yeah, it is interesting that, as I say, the insurers, we haven't heard much about them in this context. Did you have to go digging for this information, or was it readily available?
It's all the information that we have in the report is publicly available information. For about half of the insurers, we used the SEC 13F forms, which is a form that's disclosed if the company is traded on the New York Stock Exchange. So all of their stocks are listed there, and we basically did an analysis to see what fossil fuel holdings were a part of those forms. Also, some companies such as Intact, they disclose their investments in fossil fuels on their annual reporting.
Okay.
So we kind of swept information from a bunch of different sources and pieced it together.
So Intact, I mean, they're a giant player. They were reasonably forthcoming about this in terms of publicly publishing it?
Yeah, and we do point out where the companies are doing well and where there is good disclosure and there's good, say, exclusion policies for coal. We can see that Desjardins has a pretty solid exclusion policy for coal. So we do outline and point to what these companies are doing well.
So they are making some moves, yeah. Do you recall, do some of them say we're avoiding the oil sands?
So Intact has some restrictions for both underwriting and investing in oil, specifically Arctic oil and gas exploration. And so it differs from company to company, but they do describe exclusions for oil and gas, as well as some engagement policies with their high emitting either clients or investees.
Just this is slightly off topic, but the government, as you know, has proposed penalties for companies engaging in alleged greenwashing. Are you happy to see that?
I think it's good to see that regulators are diving into this topic. We see penalties for companies misrepresenting themselves on financial statements. And this is a similar thing. Climate risk is very, very financially material. And so it's really good that that regulation is starting to come in. I think when it comes to transition plans, insurers and all financial institutions should really be cluing into this greenwashing regulation that's coming out.
Just on the greenwashing, I think one question, though, is does the government get to decide what's true or not? Some of these things are a little hard. You get into complicated science. Isn't that a danger, the government censoring what companies can say?
Well, that's why experts come in, and they are the ones that are really, informing this regulation. The regulation for financial disclosures has had to go through such a rigorous process to be able to be where it is today and be so solid. So similarly with greenwashing, we have experts coming in on climate science, on disclosure, emissions intensity, all of these different metrics that are being disclosed.